G'day guys, Josh from JT Home Loans here again. Here to talk to you today about the differences for investors really around principal and interest-only strategies for their lending. One of the most important things to consider is your age, and are you planning to own the asset or assets by retirement? If not, why not? At the end of the day, it's great to have these assets. You really want to own as much as you can or be getting a maximum return you can to support your retirement. At the end of the day, this is where interest only and principal and interest repayments really make a huge difference. Principal is about owning the property. Interest only, you're really just treading water. But what's your strategy? Is the property designed to get you growth? Is it designed to yield better returns for you? So something like a commercial property that doesn't necessarily grow so quickly in terms of capital value, but maybe it does return quite a high rate of yield or returns rental per month versus, your standard conventional blue chip property in a suburb like Toorak in Melbourne where it's quite blue chip and you'd be expecting decent growth depending on what you bought. Houses versus apartments, that might be. Interest only is really good though, don't get me wrong, that certainly has its benefits. You're not building equity, but you're certainly improving your cash flow position. So maybe you have an owner-occupied property, which they call non-deductible debt. So if that's the case, you probably want to use that to pause your investment property, use the tax benefits you're getting there, and then be able to accelerate down the payments of your owner-occupied property that you get no tax benefits from come into financial year. Speak to your accountant though. We are not qualified in the areas of taxation or CGT, but certainly can work with your accountant to provide the best outcome based on your needs. Principal and interest, it's obviously a higher commitment initially in terms of payments, but the added advantage is you're building equity, creating capacity potentially for future lending. So obviously the more equity you have and the more income you have, the better chances you're going to have of leveraging even another property if that's something that interests you. Last but not least, you've got to develop a clear understanding on why and how you want to invest. That's going to really determine whether or not principal and interest or interest only is appropriate to you. But as always, if you've got any queries, you just come and hit us up. We'll work on a tailored plan for you. Thanks so much for watching videos. If you can please click like, share, post any comments below, any queries you have about the content, anything else you'd like to know, just feel free to reach out. We're here for you anytime.